Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Wednesday, the 9th of August, and we have Jessica Amir, market strategist from Moo Moo, coming to us out of Australia. Jessica, as always, great to have you on the show.
Great to see you again, Brian, as always.
Now, just for a start, let's take a look at how numbers look like across the region. We start with cryptocurrency. Bitcoin is at 29,762. It's up 1.9. With the KLCI in Malaysia, it's up 0.44%. Shanghai is down 0.36%. The ASX All Ordinaries is up 0.15%. The Nikkei is down 0.34%. The Hang Seng is down 0.22%. Rounding up the numbers, we've got the Kospi, which is up 1.26%. Jess, your view on market performance in the first half of the day?
Thanks, Brian. So there's a lot going on in markets. So firstly, before the Asian session began today, we had a deluge of disappointing data to go through. And the first thing is that we had a ratings agency downgrade US banks. And that's amid concerns about the financial system, particularly in the wake of what happened after SVB. So that is why we're seeing the US dollar rise. And as a result, most indices are lower. On top of that, we also, once the Asian session opened, we were expecting a disappointing week for Chinese data, but the numbers came out today and they're even more disappointing than expected. So this is causing a bit of a dampener on the Asian Pacific equity session today. And then on top of that, the bad icing on the cake, I guess, if you will, is that we did hear from the US saying that they are going to put a ban on how much US firms can receive funds from China. And this is things to do with like AI chips, etc. So there's going to be a limit on Chinese investment into US technology. So that is going to be disappointing for a lot of chip makers in the US.
So, slew of bad news out of China. I mean, we haven't had good China data for quite a while now. But Jess, all eyes of investors this week are really focused on the US inflation numbers. What should investors be mindful of?
Well, we are expecting, the broad market, I should say, consensus is expecting inflation to actually pick up for the first time in over a year. Now, this is a real bit of a red herring. And what I mean by that is we are actually expecting inflation to pick up, and that puts the Fed in a precarious position. So why is inflation expected to pick up? Well, it's because we've had more people turning on electricity at this time of the year when they're normally not flicking on the electricity switches. So we've had record high temperatures across the US, and that has pushed up electricity prices. We've seen higher electricity prices and gas prices. And this is a fairly large component of US CPI that is expected to pick up when the data comes out, US Thursday time. So we'll get that data and absorb it on Friday, our time. But all in all, I guess for investors, the takeaway here is really key. Expect inflation to pick up for the first time in over a year. And number two, think about how you can take advantage potentially of higher prices in energy and what higher demands mean for your portfolio. So that might mean expecting higher earnings from oil and gas companies, given that demands are going to be rising and OPEC still saying there's not enough supply. So expect higher prices, expect higher inflation, and expect companies in the oil and gas space to see higher earnings, and that'll probably translate to higher share price growth.
Got you. So really look out for your oil and gas sector, and add that to your portfolio if it probably isn't already. Now, speaking of adding stocks to your portfolio, the name that everyone talks about a lot is Apple. And Apple numbers, while disappointing, the underlying numbers tell a very interesting story. Maybe, Jessica, you could give us an analysis of what your thoughts are around Apple.
So, great question. It's really interesting to point out that if you have a look at Apple shares, so far this month, they're actually seeing their biggest drop since December last year. And look, some are seeing it as an opportunity to get out and take their profits and run away, where we're seeing another cohort of investors actually buy into the dip. So they're averaging in over time. So if we have a look at firstly the technicals and then we'll think about the fundamentals, the technicals are suggesting that Apple is now oversold. So after their results, what we actually saw was short selling dropped. Before Apple's results came out, short selling saw a huge pickup. So basically that's saying investment managers were expecting weaker than expected results. And we saw those numbers come through. Apple reported their third quarterly drop in revenue. And they also are guiding for a weaker quarter ahead. So that is not very good for Apple if you are thinking about Apple in the next quarter also. But if you are a longer term investor, there is a real opportunity to get ahead because their market cap has now fallen under $3 trillion. It's not going to stay at this level for some time. And as we also said, the technicals are suggesting that they've been oversold, and also the short seller interest has fallen. So you're likely to see more institutional buying on the quant trading side. And then if we just think about the fundamentals are this. So there's three key growth areas for Apple. And we saw that these three key growth areas haven't even gained traction yet. First one is services. Services revenue hit a record all-time high. Some regions around the globe haven't even rolled out services revenue. For example, in Australia, we don't have buy now, pay later services accessible in Australia. So that is going to translate to higher earnings growth when services roll out across the world. Secondly, the largest cohort of Apple's revenue is China, sales to China. And we did see very disappointing data from China today. And so we haven't really seen the rubber hit the road. We know China talks the talk, but they also walk the walk. And they've done this over the last 30 years. What do I mean here? Well, we are expecting big stimulus to come. Will it be bigger than the record stimulus that we saw after the GFC? I don't know, but you can bet your bottom dollar you're going to see some stimulus. And that's going to drive earnings growth and revenue in China. So again, they're the two largest growth drivers. And then think about this, Brian, as well. So Apple's EV, their electric vehicle, we didn't see any detail on that at all. And when you think about wherever you are tuning into this interview, if you think about what you want to buy a car in, say, 2030 or the year 2050, what car will you be able to buy? A new car? Well, you'll only be able to buy an electric vehicle in some countries. Apple, they haven't even declared in their results when earnings are going to pick up from. But we know the industry data is telling us that Apple is going to roll out their EV in 2026. So that means the market has not really factored this in. So this has been discounted. The market have ignored it. And so this is telling you if Apple is going to rival Tesla's EV, then this is surely going to be one of their largest, if not perhaps maybe one of their biggest revenue contributors in years to come. Will it outpace Apple's iPhone? Probably not, but maybe in 50 years or so, it might so. So this is a real opportunity here for long-term investors.
So one of the key things that, Jessica, you talked about, and I want to zoom in on that, is services. Now, what we've really, and the market has not talked about, is the virtual reality headset, which they've released earlier this year, which from many analysts' perspective and tech analysts, I might add, not business analysts, the opportunity is actually in the services business, where Apple has growth potential in the B2B marketing, B2B aspects of industrial use for those goggles. So this is something that I think a lot of business analysts have yet to catch up on. But I've spoken to other technology analysts on our technology show, and that's where they see the potential. So there's a lot of upside in Apple, I think, moving forward. Now,
I
Jess, thank you
1,000%
very much
agree.
for your
Yep.
insights. Yep. Thanks for your insights, Jess, and thanks for coming on the show.
Thanks, Brian. Have a wonderful afternoon.
Now, we've been speaking to Jessica Amir, market strategist at Moo Moo on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.